So let's start off with, we're very proud of ISX Financial's performance. Since incorporation in 2011, we turned profitability in 2019 and have remained so ever since. Since the merger in 2021, ISX Financial just closed a record year in 2023. We earned revenues of around 32.3 million, an EBITDA margin of 31%, and a net profit after tax of 5 million. We have a very strong balance sheet. We're well capitalized, we're liquid, which paves the way for our growth plans. As far as where do we see opportunity? So we're a payment company, we offer all forms of payments to our customers. But over the recent years, we've actually really embraced open and instant banking. I would say the reason for that is basically because we see it as a win-win for both consumers and merchants. Why do I say that? Primarily because it's simple. A couple of clicks, transaction is done. It's safe. There's no need for consumers or merchants to share any information. It's fast, so it's almost as instant that you get your payment. And it's flexible, which means that a consumer can choose whichever bank they want to actually finance their transaction, which gives them that flexibility. By way of growth of the industry, to put into perspective, open and instant banking is targeted to surpass 130 billion by 2028. To put into context, in 2022, it was about 15.2 billion. Now, regionally, Asia Pac is leading the way with instant payments. The Americas is embracing FedNow and ISO 20022, which is paving the way for financial landscape. They're changing their financial landscape. And here in Europe and the UK, instant payment is the choice for both merchant and consumers. Here in Europe, SEPA Instant, as well as in the UK, the faster payment system. So firstly, I'd like to start off by saying 5 years forecasts in a high growth segment is actually quite difficult. At ISX Financial, we use a 3-year forecast. That enables us to stay kind of strategically focused. We have clarity and clear direction, you could say. 2024, we're anticipating revenues of about 45 million. That's a 38% year-over-year growth. We're anticipating EBITDA margin of roughly around about 35%, and a net profit after tax of 11 million. To put into perspective with respect to the market in the high growth payment segment, 2024's year-over-year revenue growth is circa roughly around about 14% and an EBITDA margin of 23%. So what does that actually mean? Our performance is up there with market leaders such as Wise, Nuvei, and Adyen. 2025, we're looking at a sort of a revenue growth of roughly around about 30%, EBITDA margin of 33%, and I would say 2026, our aim is revenue growth of roughly around 25 to 30% and an EBITDA margin of no less than 25%. So we've got a robust leadership team at ISX Financial. So if I start off with our CEO and Managing Director, he's a serial entrepreneur. He's got a background in law and engineering. He's listed a number of companies, and he continues to lead our sort of strategic vision. He's supported by an executive team who most of them have over 2 decades worth of experience in payments or banking, I should say. We've recently added senior staff members across the organization, so within engineering, sales, compliance, risk management, and finance. And I'd like to say that also our independent board members, have significant experience also. As an example, our chairman had over just under 2 decades worth of senior leadership positions at HSBC, which underscores our commitment, I would say, to governance, risk management, and compliance. So ISX Financial, as we know, is a technology company. We provide banking as well as regulatory solutions. We're an electronic money institution where we provide transactional banking and treasury services largely to business customers in the AML regulated sector. In 2023, we processed probably just under 2.5 billion in payments. We anticipate in 2024 that will be roughly between 3 and 3.5 billion. We know we have the trust of our customers as they have trusted us with their funds, and funds to the tune of roughly around about 150 million. So we will continue to use the experience that we've gained over the last decade in this segment and continue to roll out our solutions globally. In addition to that, as mentioned, we're seeing a lot of growth in the open and instant banking propositions that we have. The beauty behind owning your own technology stack is that you can lift and drop it with a short time to market and capitalize on the growth that I mentioned earlier on. To me, I think that that's our competitive advantage. And in addition to that, we are also seeing a lot of demand for our corporate banking and instant and open banking propositions in the marketplace segment, as well as in the retail segment. Our focus at the moment is the UK. So we're seeing a very, very promising pipeline of opportunities there. And we aim to push into the Americas mid to late 2025. Okay, so we've been planning this for a little while. We've explored probably 3 options, all of them, you could say. IPO with capital raise, a direct listing of existing shares, as well as a merger via SPAC. Our strategic decision was to focus on a direct list, and that's primarily because we wanted the market to determine our valuation and provide liquidity to our loyal and very patient shareholders. With respect to not raising capital, well, that's primarily because we are profitable. We have a very strong balance sheet, and we believe that our short to medium term plans can be financed using that. However, we continue to perform very well. We've just come off a record first quarter. We're just about to publish our first half results, and we are also seeing a number of value accretive opportunities. And as we explore them, if our balance sheet cannot provide us with the capital that we need, we may also consider raising some capitals via an IPO. As mentioned earlier, we're a profitable company, strong balance sheet, and as a result, we're capital accretive. Hence the reason why we don't feel as though we need to raise capital to service our short to medium term plans. We're constantly exploring new opportunities that can accelerate our growth rate, both organically and inorganically. As an EMI institution, we have obviously a goal to be a full-fledged payments bank, as an example. So we wouldn't say no if an opportunity arose where we knew that the investment in that opportunity would hit a certain return on that capital. As far as meeting our investors' expectations concerned, We're very close with our institutional investors. We talk to them regularly, and they've endorsed our vision and our plans by giving us indication that they would like to increase their holdings. The short answer to that is yes. We've assembled a team to support our listing requirements, so brokers, agents, lawyers. However, I cannot disclose who and where we will be listing until we've actually lodged our prospectus. Once that's done, we will publicly disclose the details of our upcoming list.